Welcome to Alternatives Federal Credit Union Intro to Homeownership, information for first-time homebuyers. Topics we'll cover today are income and debt, credit, savings and down payment assistance programs, and the home buying process. I'm Kim Ritter, Housing Counseling Program Manager at Alternatives. Let's look at the different types of income that a mortgage officer would consider. First, we'll need to understand gross versus net income. Your gross income is the bigger number on your paycheck. This is what you get before anything is taken out for taxes or insurance. Your net income is the amount that you receive in your paycheck. This is your take-home pay. A mortgage officer is always going to look at the gross income, so that's what we'll be focusing on today. Types of income might be a W-2 or pay stub income. This is when you work for someone else. Self-employment income or contract worker might receive a 1099 miscellaneous. In the case of self-employment or contract worker, a mortgage officer will take the last 2 years of their tax returns and average those numbers together to find their income. Child support, alimony, or a fellowship if you're a student must be documented and continuing for a minimum of 3 years. For example, if you have an older child that might be aging out of child support in the next few years, you may not be able to count this income towards the mortgage. Social Security and disability are not taxed, so we'll need to account for this by multiplying this amount by 1.25%. This is called grossing up. Section 8 also gets increased by 1.25% and counts towards the mortgage. Unfortunately, under the table income does not count. If it's not on paper and the government doesn't know about it, then we can't count it either. Employment. What does a mortgage officer look for as far as your employment? Job stability shows that you are reliable and you like your job, and you're more likely to stay there, and you're more likely to have income to pay off the loan. A stable income equals stable payments and no foreclosure, which means no loss for the financing institution. It's all about the likelihood of repayment of the loan. Many mortgage officers are going to be looking for 2 years in the same job or field. It's okay if you've jumped around with jobs as long as you've stayed within the same field of work. Private mortgage insurance often requires this as well. They're going to be looking for you to have 2 years in the same job or field. How much home can I afford? This is a big question on a lot of people's minds. How do I figure out a rough estimate of how much home I can afford before I start the process? In general, if you take your gross annual income and multiply that by 3, that can give you your potential home price. For example, if you have income of $50,000 a year, multiply that by 3, and you get a potential home price of $150,000. Keep in mind, there are a lot of factors that go into being able to afford a home, but this is a great place to start. Speaking of debt to income ratios, let's talk a little bit more about what that means when applying for a mortgage. Debt to income ratios are used throughout all types of lending. Many lenders assign a percentage threshold of how much debt you can have versus your income. How can I find my own DTI percentage? Find your gross monthly income, as well as your total monthly payments for debt, such as car, credit cards, student loans, etc. Many lenders add in your housing costs as well to ensure that you have enough for your housing payments like rent or a mortgage. Monthly debt payments plus housing cost divided into your gross monthly income will give you your DTI. For example, if you had $4,000 in gross monthly income and $600 in monthly debt and a mortgage payment of $1,000, you would add the $600 of monthly debt to the $1,000 of mortgage payment, and that gives you $1,600. Then you divide that $1,600 into your $4,000 gross monthly income, and that gives you a 40% DTI. Let's look a little bit closer at debt to income ratios and how we calculate them. First, let's look at the front end ratio. This is also known as the mortgage to income ratio. It's a ratio that looks at a lower percentage of gross income for the housing payment. Take your gross monthly income and find 30% of that. Most lenders use 21 to 31% to calculate the front end ratio. For example, if you have $4,000 in gross monthly income 30% of that is $1,200 in a maximum mortgage payment. Now let's look at your back-end ratio. This is also known as the debt-to-income ratio. It's a ratio that looks at a higher percentage of gross monthly income, but it also subtracts the monthly debts from what's available. So if you take your gross monthly income and find 40% of that, and then subtract your monthly debts. Most lenders use 36 to 50% to calculate the back-end ratio. For example, if you have that $4,000 in gross monthly income, find 40% of that. That gives you $1,600 for your mortgage payment. But we still need to subtract your monthly debts. Take that $1,600 and subtract $600 in monthly debts, and that gives you a maximum $1,000 to go towards your mortgage payment every month. Mortgage officers will take the lower of the $2 amounts. This means that your back-end ratio at $1,000 would be the maximum mortgage payment that you could afford. A mortgage officer will look for 3 active loans with 1 to 2 years of on-time payment history. Ideally, they'd like to see no outstanding collections, but there may be some leniency for medical collections or the total amount of debt owed. So please check with your mortgage officer for specific details. Be sure to check all 3 credit bureaus because not all collection agencies report to all the bureaus. A mortgage officer will also look to see if there's enough room in your debt-to-income ratios to be able to take on a housing payment. They're looking for a total of no more than 40% of your gross monthly income. 30% or less is ideal. You'll also need some savings. You will need enough savings or down payment assistance to cover the cost of escrow, down payment, and closing costs. What score range does a mortgage officer look for? Many government programs, such as Federal Housing Administration, will work with scores as low as 580. Many conventional loans, like a 30-year fixed-rate mortgage, will want to see 620 or above. Ithaca Neighborhood Housing Services will want to see a score of 650 or more. The higher your score, the more money you save on interest. While we're talking about scores, it's important to note that Alternatives does not use your score to determine whether or not you will be approved for a mortgage. Instead, we do use the score to determine the interest rate that you will receive on your loan. No matter what your score is, we encourage you to talk with us. We'd be happy to look at your particular situation and let you know what's possible. What goes into a credit score and how can I improve mine? The chart below is the general makeup of what a FICO score is. Your FICO score is based on 5 different categories. The first and most important is 35%. That's your payment history. Paying on time every time is the most important part of being able to have a good score. It's important to note that a late payment occurs after 30 days late. This does not mean that if your loan is due on the 1st and you make a payment on the 2nd, that you will get a late payment on your credit report. The late payment on your credit report is considered 30 days past due. Your lender may charge you a late fee, but as far as your credit report is concerned, you won't have a late payment listed on your report until 30 days past due. The next biggest part of your score is 30%. That's your available credit. This is just your revolving debt, like credit cards or a line of credit. The key here is to keep your balances under 30% of your limits. This means if you have a credit card that has $1,000 to use, you don't want to put any more than $300 on that credit card at any time. And this is just because we don't know exactly when the credit card company is going to report those balances to the credit bureaus. 30% balances to limits is the tipping point of where you look risky or not to the credit bureaus. If you're using more than 30% of your limits on your credit cards, it might look like you're relying too much on your credit. As always, lower is better. So if you can get your balances below 30%, that's going to raise your score even more. So together, your payment history and the balances on your credit cards make up 65% of your score. Doing these 2 things correctly can really help improve your score. The next biggest piece is 15%, and that's your length of history. That's looking at how long you've used credit. Ideally, they're looking for you to have an average age of 5 years or more on your credit lines. For example, if you have a 10-year-old student loan and you open up a brand new credit card, those two will average their age together to 5 years. If you open up a second brand new credit card, that will reduce the average age even more. You'll want to be really deliberate with opening up new credit and make sure that you absolutely need it before moving forward. The next piece is 10%, types of credit. Having experience with different types of credit, such as installment and revolving accounts, can help your score as well. They want to see you have experience with the larger but more predictable installment debts and the more unpredictable but maybe smaller accounts on the revolving debts. And the last piece is 10%, number of inquiries. Hard inquiry occurs when you apply for new debt. You want to keep this till about 2 or less a year. It's important to note the difference between a hard inquiry and a soft inquiry and how they each affect your credit. A hard inquiry occurs when you apply for new debt. However, if you're looking in on your credit for educational purposes only and not looking to take on new debt, that's called a soft inquiry, and that does not affect your score. Hard inquiries can affect your score about 2 to 3 points each. You'll want to keep these to about 2 or less a year. If you're shopping for a car or a home, don't worry. You get a 45-day window for these inquiries. Your credit report and score know that you'll be rate shopping, and they condense these down into one hard hit as far as it relates to your credit score. Your credit report will still have a list of all the inquiries and where they were from, but as far as your score is concerned, it will only be the 2 to 3 points. FICO credit scores range from 350 to 850. If you've seen a difference between what your lender tells you your credit score is and what you might see on an app, that might be due to FICO versus Vantage difference. Your FICO score uses the above algorithm to determine your score. The Vantage score, however, adds another pie slice and tweaks the percentages to determine a different score. It's important to remember that your credit score has nothing to do with you as a person. Credit scores are simply a mathematical way to estimate the likelihood you will be able to pay back a loan based on past lending history. This has nothing to do with you being a good or a bad person. Having a good score does not make you a good person, and having a poor score does not make you a bad person. This simply has to do with life circumstances and the ability to repay based on past history. Remember, everything is fixable. We're here to help you through it. The chart below shows the likelihood to default at any given score. For example, if I had a room of 100 people and they all had scores below 550, 87 of them would have a hard time paying me back. If I had that same room of 100 people, but they all had scores above 800, less than 2 of them would have a hard time paying me back. Just remember, your score does not tell your personal history, and that is definitely what we are interested in. We want to know the whole picture of you, so please, let us help. How do I know how much money to save? Closing costs can be 3 to 5% of the home's value. Down payment can be 5 to 20% of the home's value. Escrow is 1 year of taxes. For example, if you're buying a $100,000 home within a tax rate area of 28%, your closing costs can be anywhere from $3,000 to $5,000. Your down payment might be anywhere from $5,000 to $20,000, and your escrow might be about $2,800. Your total needed would be somewhere between $10,800 and $27,800. Yeah, that is a ton of money, but don't worry, there's financial assistance available to help. Let's talk about the programs that are available to you. Ithaca Neighborhood Housing Services offers down payment assistance. The Homebuyer Dream Program also offers down payment assistance. The Family Self-Sufficiency Program through your Section 8 provider can help with saving up for your own down payment. Habitat for Humanity also offers low-cost housing. Let's look a little closer at Ithaca Neighborhood Housing Services and what they have to offer. They can offer assistance of up to 25% of the home's value or $20,000 maximum repayable loan, whichever is the lower of the two. This works out to be about $90 a month. They serve Tompkins, Tioga, Chemung, Schuyler, Seneca, Cayuga, and Cortland counties. They also have repair funds available for some of these counties. Income guidelines are based on the county the home purchase is located in and your household size. Ideally, they'd like to see credit score of 650 or more. You do need to have 2% of the home's value from your own money saved. www.ithacanhs.org/homeownership for more details. Let's look at what the Homebuyer Dream Program has to offer you. This is a $9,500 grant if you have $1,000 to go towards the home. There are income guidelines that vary by county of purchase and household size, so please check with your Homebuyer Dream Program provider for more information. Alternatives Federal Credit Union serves Tompkins, Tioga, Chemung, Steuben, Schuyler, Seneca, Cayuga, and Cortland counties. You must have a signed purchase contract in place on the home before we're able to reserve funding for you. You also must get your mortgage with whoever you get the Homebuyer Dream Program funding through. For example, if you got your Homebuyer Dream Program funding through Alternatives, we would ask that you also get your mortgage through us as well. This is forgivable after 5 years. If you stay in the home for 5 years, that's great. Everything is yours. If you do move before that 5 years is up, we just do some math to figure out if you owe anything back. Visit www.alternatives.org for more information. Family Self-Sufficiency Program was Section 8. Once selected, this program allows 5 years to achieve your goal. As your income increases, your rent portion also increases. The additional amount that you're paying goes into a savings for your goal. If you're participating in Section 8 with Ithaca Housing Authority, Tompkins Community Action, or Arbor Housing and Development, please contact them for more information and to enroll. Habitat for Humanity is another great resource. You must demonstrate a need for safe, affordable housing. You also need to perform 350 hours of sweat equity through building homes, taking classes, or volunteering in a habitat restore. You must be able and willing to pay for a mortgage. There's no down payment required, lower interest rate loan programs, reduced property taxes, and the houses are sold at below market value. Visit www.habitat.org for more information. Let's dive into the home buying process. This is part 1 of 2. The second portion would be getting ready for closing, and we can look at that in a different video. First, you want to meet with your housing counselor to identify barriers and create a plan for homeownership. Next, you'll want to meet with INHS for approval for down payment assistance if you'd like to participate and are income qualified. You'll want to also get a pre-qualification with several lenders. They can give you what's called a comfort letter. This is a letter that shows the realtor and the seller how much you're able to afford in a home and gives them comfort that you've already met with your lender. When choosing a realtor, select someone who is attentive, responds quickly, and you feel comfortable with. It's important to choose someone you trust for such an important decision. After you've shopped for homes and you found one that you like, you can put an offer in on it with contingencies. Having your realtor include contingencies on the offer allows you a way out of the deal if you do not want to purchase the home. Common contingencies are things like financing contingencies, which would be making sure that your mortgage officer is able to approve your loan. Another common contingency is on the home inspection. You want to make sure that if you get a negative home inspection back, you have a way to walk away from the deal. If your offer is accepted, you may need to write a check for earnest money deposit. Earnest money shows that you are serious about this purchase. After that, you should check in with INHS if you're using their down payment assistance and let them know your offer was accepted. Next, you'll want to hire someone to conduct a home inspection. When hiring a home inspector, be sure to select someone with good reviews and someone you trust. This is an area where you get what you pay for, so don't be afraid to spend a little bit more to get your money's worth. If a home inspection goes well, apply for your official mortgage lending and get your loan estimate. If the home inspection brings up problems, you can ask the seller to fix them, negotiate the price of the home, or back out of the purchase if you've put that in as a contingency. Next, you'll want to apply for Homebuyer Dream Program with your lender if it's available and your income qualified. Takeaways and questions. The biggest thing to take away is that there are mortgage products to fit your needs. Know the home buying process and use your resources for help. You're not alone. You don't need to know every single thing about the home buying process. You have resources for help. Realtors, housing counselors, and mortgage officers are all here to guide you. It's okay to feel nervous, but overall, you should feel confident in your knowledge and the decisions you're making. And of course, I'm always here to help. If you'd like to make an appointment with me to discuss any of these topics, please make an appointment at www.alternatives.org. Thanks for joining. We'll see you next time.